If you truly want to be a profitable trader, then one thing you need to take into account before placing any order is top-down analysis. So now, what exactly is top-down analysis? As the name already said, top-down simply means that analyzing the market from the highest time frame to the lowest time frame that will actually determine your order. Like for a day trader, one of the best things you can actually do for yourself is simply analyzing the market from the daily 4 hour and then the mini time frame before placing your order, because not knowing what is happening on the higher time frame can actually mislead you to place orders that doesn't go alongside the market direction on the lower time frame. And that's what I'm going to share with you in today's video. So in today's video, I'm going to take you through a complete top-down analysis system that you can actually use to trade regardless of the strategy you trade. Whether you are a smart money concept trader, an ICT trader, or a price action trader, it doesn't really matter. All you simply need from this video is comprehend the idea behind top-down analysis and also customize it to fit into the particular strategy you are trading.
So hello guys. So now that we are on my computer, let's get straight. Let me show you how you can do top-down analysis with pure price action, ICT, or smart money concept. It doesn't really matter, as I already said. So now when it comes to doing top-down analysis, the first thing you need to pick is your time frame. So the kind of trader you are will determine the time frame you use. So in case you don't know which time frame best suits the kind of trader you are, you can see the video flashing on your screen right now. You can simply search for it and add my channel name to it, and you're going to get it immediately. Or you can simply check my Forex trading category. You're going to find that particular video and make sure you watch it, because that video will tell you which time frame is best for the kind of trader you are. So whether you're doing top-down analysis or not, that video simply focus on the best time frame you need, whether you're a swing trader, day trader, or scalper. So for me, for this particular video, I'll be using a very high time frame for this trade. We'll be using the daily, 4 hour, and 1 hour. So I like using these 3 time frames in most cases because they give me the higher overview of the market. Because when I'm opening a trade, I hold my trade for 4 hours to from 4 hours to over a day. So I can hold trade for 2 days, 4 hours, even more than that. So all totally depends on the kind of person you are and how you want to hold your trade. So now that aside, I've already shown you the time frame, and what we are going to do here is that 4 hour will be the daily time frame will be our higher time frame. No, we are doing top-down analytics, analyzing from the top to the bottom so that we can find the best positions in the market. So with that, we are going to use the daily to identify the market direction, the 4 hour to see if there's any other key level, which is support and resistance levels in the market, and then the 1 hour to probably look for an entry opportunity. So with that already said, let's get in. So starting off with the daily time frame, taking a look at this market, I don't have to tell you what this market is actually doing right now. Whether you're a newbie trader or not, you should know that what the market is selling. So why is this market selling? The market is simply selling because we can see the market taking out previous swing lows. You can see a swing low was created here. The market took it out. Another swing low, the market took it out. Another swing low, the market took it out. So with all the market taking out all these swing lows, it simply tells us just one single thing, which says that the market is currently what? A bearish market, meaning we should be looking for a sell opportunity since the whole market direction is going downwards. So now with this in mind, after identifying this on the daily time frame, and we know that the market is actually selling downwards, the next thing we could actually look at for is simply trying to see if we can get a trend line in it. And looking at it right now, talking of a trend line, you see that we got a trend line, but it's not a perfect trend line. Why is it not a perfect trend line? A perfect trend line should get at least 3 touches, and this will only have 2 touches. So with these 2 touches, we can't really say it's a trend line, but we can see that the overall direction of the market is actually a bearish market. So now we have these 2 things in mind on the daily time frame. Now we've identified that the market is bearish. We've realized that the full momentum of the market is going downwards, which still means bearish. Now, the next thing we need to do is that it's not advisable for us to place a trade here, because when you place a trade here like this, each of these single candlestick you see here takes 24 hours, which is 1 full day to form. So it will be bad for us to actually place a trade here if we are not investors. Investors do that. They use the they use the weekly, monthly, and then even the yearly time frame to do the analytics. For we, the day traders, and then short-time swing traders, we don't really go that much far. So with this in mind now, let's go down to the 4 hour time frame to see if we can identify key support and resistance areas in the market. So why am I using the 4 hour time frame to determine my key support and resistance area? Because that is a medium time frame. that time frame breaks every single 1 hour candle into a piece of 4 hour candles that have shown us how the market has reacted for the past 4 hours. Because if I'm holding my trade, I hold my trade for a period of 4 hours to 1 or 2 days maximum. So let's go down to the 4 hour time frame for that. And then on the 4 hour time frame, what you can see is that here was a key area of resistance, support that the market has taken out. So this leaves us with nothing but another option that will have a new area of support. So now the next thing we need to do here is to draw our support and resistance areas. So over here now we can get this one here. You can see this is the first area here. Here's an area of resistance. Why is it called an area of resistance? Simply because it's the highest point in the market that the market hasn't broken above currently yet. So it's a key resistance area. And after that, we still have another ones here. You can see them here. Still have another resistance area here that we can also look at on the 4 hour. So now when I'm drawing them, I often label them with the hour to know that I did this on this hour, I did this on this hour, so that I don't get confused. So here I'm going to put 4 hour major 4 hour major arrow, which stands for resistance. And I'll have this here. And then over here also, I'll write another one, 4 hour minor. So I have this in here right now. So I know that these are area of resistance that I've drew in the market. Now I'm just going to duplicate this one here. And then I'll just say clone. And then I'll bring it over here. So the reason why I'm bringing it over here is simply because if the market pulls back into this area, we could be looking for a buy opportunity if it fails to break out of it. But since the market is still above it, we are still all positive on a sell. So this one will say 4 hour support. So I have this as a 4 hour support. I won't mark this place. Why? Because this place was broken. But if we look at it on 1 hour time frame, if there's any hope on it, then we can mark it. So looking at the 4 hour time frame so far, we don't have any other key level to mark except this middle one here that we can consider with just a stroke for now. So now after this, let's go over to the 1 hour time frame, which is our final time frame where we are going to look for entry opportunities. So over here on the 4 hour time frame, we know that this here becomes a minor, even though the market has broken above it, and we still have this other one here, which is another key area that we can be looking to sell from. So now over here, I'm going to put 1 hour resistance, and then over here I will look for, so here is another resistance area that the market could use as a support area. This area here, it was a resistance area and the market could use it as a support area, so we need to watch out for it. So for this, I'm going to put I'll just tag this one as key zone. The reason I'm tagging it as a key zone is simply because this market can come in here and then it can give us, because if this market come in here and gives us a bullish rejection, we can buy it to the upside. So that's why I call it a key zone. It's not a support, it's not a resistance yet, because there's no confirmation. You can see market touched it and they came back here and they broke above it once. This makes it a simple key zone. The reason why it's called a key zone, I call it a key zone, is simply because this market can easily come back and break out of it. So if I'm placing an order, let me say if I want to place a sell order in this market, I can target here as my take profit position because anything can happen here, and I can also use it as an entry. But then I will not consider it as a support or resistance area currently, but I'm going to give it some respect simply because of this former support area that we have over here in the market. So this is simply how this strategy is. So now the next thing I'm going to do from here is simply because now we are looking for an opportunity to actually either buy or sell this market. Now here are our prompt to actually place a trade in this market. So now our prompt to place an order in this market totally depends on few things. If this market gets to this area of support, this area of resistance, and then gives us a rejection that takes out the previous swing low, we are going to place a sell order immediately. And on the other hand, if this market breaks out of this area here, let me say the market breaks out of here and then comes back to breaks out of here, comes back to retest here, we can buy it to the upside. But then if the market doesn't do any of this and came straight to this top one, then we'll be considering a sell, with the fact that the overall market direction is actually a downtrend. So that one can give us a possibility to be more focused on looking for a sell opportunity rather than a buy opportunity. So now let's actually play it and see what happens from here. Okay. can see the market broke out of this one easily, without giving us any proper pullback to this key level here, looking at it on the 1 hour time frame. So we can watch it and see where the market head to next. So from here now we can see that the market head to this 4 hour area. Let me go back to the 4 hour. You can see that the market went to this 4 hour minor, and getting to this 4 hour minor, this one gives us only one idea in this market, which simply states that what the market got to the 4 hour minor and then gives us a rejection. And if we should come over to the daily time frame, let's look at this 4 hour minor. You can see this 4 hour minor is the nearest resistance area on the daily time frame. So this one shows that we can actually place a sell order, considering the fact that the moment the market got to this top here, it gives us this rejection and gives us this big bearish momentum candle. And then with the help of an indicator called RSI, it can also give you some more information about the market. But personally, I don't like trading with indicators, so I'm not going to use it. So I will not advise you consider adding indicators, but at times indicators will delay your entry positions. So now looking at it here, I'm just going to come over to the 1 hour time frame because that is my entry time frame. And over here now, we can see that the market are just broken this previous low here. You can see, let me just widen it out. You can see the market got to a resistance area, took out the previous low we had here in the market, and this one simply means that we are now in a good sell position, meaning I can actually sell this market from this point, considering the fact that number one, it got to a daily key resistance area. That is also a key area on the 4 hour and the 1 hour. That one gives us that, okay, the market is really bearish, and now it has broken below the previous highest point that it created in the market. Because if this market wanted to continue upward before, after this bearish candle facing downwards, this bullish one should send it back to the upside, but it didn't. So this one gives us an opportunity that we can actually place a sell order. Now with this idea of placing a sell order, now let me just zoom in. And if you are someone who like trading the lower time frame, you can also come over to the lower time frame for more overview of the market. And you can see on the lower time frame, the market is still giving us more bearish candles. So since I'm entering with a 1 hour time frame, I don't really care about those ones that much. So now I'm just going to set my levels here. I'm going to get my entry at the close of this candle here, and then my stop loss will be at this top here. So I'm just going to use this to measure my stop loss position to see if I'm going to get a decent take profit. So our stop loss position is here. We have our stop loss position at this area here. I'm sorry. Let me just get it straight. So at the break of this point here, we have our stop loss position here. I mean our take profit, and our stop loss in this key a bit above the key level here for safety reasons. And then we are going to aim for our take profit, which should be way down here. So why is our take profit way down here? The reason why our take profit is way down here simply because the market can get here, it might not get here. But then when setting my take profit, I like aiming for a very high position. However, if we should get a movement from the market whereby the market gets to this point, let me say if this market fall gets here and then gives us a reversal, then once it gets here and it doesn't give us any momentum that is going to continue downwards, we can get out. So with this in mind, we can have here as our ideal take profit 1, and then over here as our final take profit, which we don't really know if the market will get to yet. But with this in mind, we can actually place our order considering the fact that we have a good risk to reward. So let me see. Take profit position is 124 pips, and then stop loss position is 55 pips. So that is simply a good 1:2.35. So it's a good trade. So let's just trigger our order. Let me just say sell, and then I'm going to fasten up the time. So let's see what happens. You can see the market get to our take profit 1. So you can see the market starts to our take profit 1 right now. Let's see what continues from here. You see, meaning at our take profit 1, we getting at here was a decent profit position. So you can see how we simply analyze it here. It was really simple. We bought from a key level to another key level. Remember what I told you? This area here has once been a support area before, meaning it can still come back and work against you. So having our take profit 1 around this area was really okay. So if I had end here before, let me see how many pips we made then. So let me see how many pips we would have secured here. So we got a decent, that was to this point here, yeah. We got a decent 84 pips. So this 84 pips, if we're using one lot size whereby each dollar stand for $10, each pip movement is $10. 84 pips simply means that's 840 pips, and people even use more than one lot size. So you see, this one gives us a decent move to actually make profit from the market. And this is simply the idea of trading it like this. So over here now, once the market get to my take profit one, I'll close the first trade and then I'll simply hold on to it. So me, most of the times, once I get a decent profit like this, I can just close it off or simply get my stop loss position into my break even area, so that once the market gets here, it reverses and get to my entry position, it gets me out immediately. So this is simply the idea of top down analysis. You see what we simply did on the daily time frame. We look at the market direction, and then on the 4-hour time frame, we mark our key support and resistance levels, which we use as entry, and then went over to the 1-hour time frame, and then we identify other minor areas, and then we use them as our stop loss and things. So let's continue playing this candle and see what happens from here. You see how the market fluctuates around here and see shoot back down again. You see. So now the market is telling you that the market has changed from a bearish market now to a bullish market. So if you are someone who is already experienced and you backtest this strategy over and over again, with the market falling back to here, you can look for a buy opportunity to the upside because the market has failed to create newer swing lows. So now it's actually a bullish market. So with that already said, hope you find this video helpful and understood the idea of what we call what am I even going to call it? What we simply call top-down analysis. It's really not complicated. It's this simple, because if you had hold this trade, let me see how many days it took to hit our take profit first. Let me get a ruler. How many days it took us to get the 84 pips? It took us 9 hours. So it's within 1 day, 9 hours to get this take profit. And then let me see how many days it took to get to this downside. Over here is 12 days. I'm not even going to hold trade for 12 days. I can try it. But at least we got our take profit here. After 9 days, we got a decent take profit. And if we had waited and then we look for another opportunity when the market came back here, we would have still gotten into the market. So there are a lot of opportunities in the market in overall. So hope you find this top-down analysis video very simple. Remember what I said, on the daily time frame, you are looking for the market direction. On the 4-hour time frame, you are looking for the key level support and resistance levels. And on the 1-hour time frame, you should be looking for your entry positions. So with that already said, don't forget to smash that subscribe button, like this video, and tell me what you feel down in the comment section. Also join my Telegram channel where I do drop trading signals whenever I get a good opportunity. So have a nice day. Bye.